Hello and welcome to Core Finance and my guest Craig Erlam, the Senior Markets Analyst at Oanda. Welcome, Craig.
Thank you.
And we're going to look at the Kiwi versus the US dollar. So tell me what's been happening here.
Yeah, I mean, we're quite a way into this move at the moment, but there's just the main point I wanted to make here is that I still do think there's more downside to come. From May onwards, we had a nice rally in the Kiwi dollar and anything really versus the US dollar. We reached these highs above 75.50, and then we started to pull off. Again, we've got a head and shoulders pattern here. We've got the left shoulder, which was created in July. The September shoulder came a little bit higher, but I think we've got to realise, and I think it's worth noting, that peak in the right shoulder came around an FOMC meeting announcement. Around these meetings, you get a lot of volatility, so there's only so much you can really read into these bouts of volatility from a purely technical perspective. But still, it held up around the 50 fib, 61.8 fib, around the same levels as the previous shoulder before breaking lower. Now that came after the initial break actually of the actual head and shoulders neckline. You can see actually that's a second right hand shoulder, the left hand shoulder coming just before the break.
4 days ago that it broke to the downside, is it?
So about 4 days ago we broke to a new fresh low below 71, so that was a bearish confirmation signal, and we also broke below those two moving averages as well. Again, nice technical chart, we found support around the previous resistance, but ultimately I don't think we're making a low here per se. I think we're just finding temporary support. If we break below that 70.50, 70 is a psychological level, so we could run into a little bit there. But ultimately, based on the size of the shoulders and the head from the neckline, I do think there should be, you would expect from a purely textbook perspective, more downside to come. I think 69.50 marks the conservative price projection, being the size of the shoulder projected below the neckline, and around those kind of 68 lows marks the price projection from the head to the neckline. And so, like I say, when you're trading around the 70, 50s, 70, 60s, it's not entirely surprising to see the 71s being sold into. Again, there's possible for a bit more of a correction, but I do think medium term here, it certainly appears that there's more downside to come.
So you think it maybe hovers around the continuation of that neckline that we've broken on the head and shoulders? Maybe for a little while before a confirmation to the downside.
There's certainly potential for that. It's interesting, like I say, today's rejection looks very similar to the Australian dollar pair, where we have rode higher earlier in the session, but that's been instantly rejected back to the downside. So a daily close like this, and we've got two candles in a row where we've seen the move higher, followed by a rejection, and I think that's quite interesting on these charts from a technical perspective. That may suggest that we may not even get a correction or a consolidation. It may just be immediate downside, and I think break of the 70.50 takes out these previous resistance levels, so turn support. 70 may offer some support as well, like I say, but this could be quite a bearish signal, the fact that the correction has been so small.
A very interesting looking chart pattern indeed. Thank you very much.
Thank you.